All right, traders, George here, and time for an update on gold. Before we get into a live chart, let me bring you back to 2 months ago. This is the screenshot from the video that I did, and this was the battle plan. These were the key price points to watch. At that time, looking for further upside, we had already crossed 43, and I was looking for 1267s to be crossed for a real pop in gold. The 1322 handle was the most important one above that 67 zone, and then we had a bit of an air pocket. I gave a nod to 1351.70. I got real precise there, and then 1356 as a structure point to watch, and above that 1390 was the key balance beam spike. So that translated for the EQ Insider Group in about 125s on the GLD, and since then we've obviously gone on a nice run. However, literally, as soon as we tagged 1390, we reversed hard. In the live room on Pi Day, no less, on March 14th, I mentioned watch for price to go below 1384 as a major signal for downside. Initially to watch for the mid 1350s, which were targets on the way up, to act as support, but if that gave way, high probability of going to 1322. Well, gold went through 55s, it went through 22, it broke the floor here of the more recent commitment area, and it's found its way all the way down to 1287. It's at 1296 right now. As you recall, on the way up, there was a spike here at 1282. On the way up, that spike changed a bit due to the trading commitment on the way up, and likewise some of these other zones. So here's what I've got now, which is a new grid to work with. So these were the old price points to watch, okay? 43, 67, 50s, 82s, then 1322, 1390, with a nod to structure at 1356 and 1429. That's the sharp reversal as soon as we tag 1390. Okay, and now we're down to this 87 zone. This is a bad move by the gold bulls to allow price to break below this heavy commitment zone here. Already in a nasty bear trend here, just finally starting to get a little bit of footing, moving up and taking over a key area, not able to hold it. So that's a real big red flag for gold. That is to the long side. Where we are right now at 96s, I've got some new price points to watch, and they're right here, 1310 to 1340. That pretty much covers this balance beam spike here. There's a lot of trading here. Some of it is from shorts covering, some of it's from new shorts going in, some of it's from people exiting the market altogether from the short and long side, some of it's from new long positions taken. So there's a lot of stuff going on here. We're at 96s right now, another 14 bucks up, and we hit essentially the floor of that zone with the ceiling getting as high as about 40, but really the more dominant area maybe around 33s or so at the top. So 1310 could see us go as high as 1340, but it's all about overhead resistance now. With this move here, it really puts the rally impulse here under extreme scrutiny. Below this area here, and really not much lower at all, below 86s, we're likely to revisit 1255 and then 1243. 1243 is a spike here. We start trading below and closing below that. We obviously have the round number of 1200, and you remember 1179 from the low over here, but at this point now we get below 43s. It's extremely difficult to prop things up at that point, and very likely to make new lows. So here's how to play gold. If you don't have a position in gold at all, and you're thinking about the long side, this is aggressive where it is now because it just broke this floor. So the bulls actually need to do some work here to get it over at least the round number of 1300, if not 1310, and at that point they still have a lot of work to do. But over 1330, 35 or so, then they're above this commitment level here, and they have an air pocket that could see them move all the way back up to 1390. This would be the most conservative place to go long gold as a new commitment here, because you're getting some proof out of the bulls that they're able to reclaim this area. Right now, they've got nothing to work with here. And just a few dollars lower, they're likely to move down to 43. If they are able to get it over this 33 to 40 zone here, there is a one-to-one harmonic that could see price move up to 1500 even. And there's a huge air pocket. Obviously, if you're watching this video, you've probably seen the others and you know the attraction to being long gold. Here is sort of an early bid to try and get a jump on gold crossing 1400. And that's attractive because there's a huge air pocket here and it could move up to 1550 pretty quickly. But you can see immense overhead resistance. That's the verbatim clause that I used in the earlier videos, and that's why. We're in a bear market, outside return to a key commitment level. If you're long and not defending that position or taking something off, then you're likely to see price fade real hard against you. So those are the gatekeepers right there for price to move up. I gave a nod to 64 on the way up to 90, and I moved 90 down to 89 based on some of the trading commitment here. These are just some other price points of note to the upside. I wouldn't get too excited about them until we see more proof from the bulls there. And then these are the price points to watch below. And this ominous red arrow is there for a reason, obviously. From my earlier videos, one of the things that I've been talking about is the breakdown here. This initial impulse, the outside return, this giant move down, and in a harmonic sense, this really has the potential to do some more work to the downside. And one of the classic things that you'll see in momentum runs, any market, any time frame, is there's sort of a bookend phenomenon that happens where that first impulse here, after extends and makes a new, much deeper impulse, it does a final move down that's of the same length. And that could see us moving down into the very low 1000s, about 1032 or so. That also puts us below a very key commitment level here around 1100. And it puts a lot of pressure on the bulls to sort of stop things at the edge of the cliff here. Below that, the heavy commitment's at about 950s. But that last impulse here is what the bulls are fighting for, whether they know it or not. When you go back on the weekly here over 1800 days to see what's up with the balance beams and where all the trading commitment is, you can see that we're at 1296s right now. This floor here, this comes in at 1304s, okay, 1305s, and we're below that. That's not a good place to be below the dominant commitment zone. So that outside return here rejected. They filled through the entire zone. Once they got over 1300, they went all the way up to the top. They completely faded against it and then broke the floor. Extremely bearish there. So an immediate recovery of 1305s plus would be a good sign by the bulls, but where it is now, a lot of gravity to move lower. That price point down here of 1032 in that camp, remember that visual right there, because while I've done enough to project some of these upside targets here, I haven't shown further relevance to the downside targets that exist. And it's really proximity to the balance beams, price proximity to the balance beams that have me looking in one direction over the other. So this impulse here, the final completion of the main extension grid that I look at, the price points come in between 1046 and 1034, and that ties in real well harmonically with that giant 1-to-1, wave 1, wave 5 confluence there. So that's what, whether the bulls realize it or not, that's what they're fighting to keep from completion, is that. And that's why this break below 1300, 1305s is so negative for gold, and it just happened here after they finally got a leg up on it. So good time to have taken profits at the top. If you were in the live room, you got the benefit of knowing about 1384s. And if you don't have the balance beam model and you're holding breaks below these key balance beams, you're probably feeling the pain if you're holding long. The exact spots where people say, if I only did the opposite, that's essentially the floors and ceilings of these balance beams. If you're not on the right side of the trade, you typically find out pretty quickly because it's a catalytic spot for the traders. So gold showing some weakness there, had a great run, played real nice with all the forecasted price points. That's your current gold update, and we'll see you back in the live room.